Thank you for joining Market News with Rodney Lake. This is a regular program for the GW Investment Institute, where we talk about timely market topics. I'm Rodney Lake, the director of the GW Investment Institute. Let's get started. Welcome back to Market News with Rodney Lake. I'm your host, Rodney Lake. This is a podcast coming to you from the George Washington University, the GW Investment Institute. We're right here in Duquesne Hall in the Duquesne Family Studio in the heart of Foggy Bottom, right here on campus, coming to you. All right, so welcome back to the people who've been here before, and welcome to anybody new. Thanks for watching on YouTube, listening on Spotify, Apple, Amazon. We love it. Thanks. Send us your comments. Let us know new episodes. Please and thank you. Also, remember, this is for entertainment and educational purposes only. Sometimes we own these companies. I'll try to mention when. We don't always own these companies. In some cases, small, larger positions. But that's not the point. This is not investment advice. Disclaimer up front here. All right. Into the company today that we're going to go over. So we're going to go over a single company on market news. We're not going to do broad market news for this episode. We're going to do a single company. That single company today is Broadcom. We own this in small portions in a couple of our portfolios here. So it's not a big holding in one of our portfolios rather. So it's not a big holding. But it's an important company and something that we're watching, and everybody I think has been watching the semiconductor business lately. And obviously if you're, maybe it's not obvious, but Broadcom is really a semiconductor company across a couple of different categories. So we'll talk a little bit about Broadcom, but let's get a sense for Broadcom. The ticker is AVGO. So let's dive in. We're here in, heading towards the end of May here. May 19th when we're recording this, 2026. So, this information is going to be from around then. But let's dive into the company. So what's going on with Broadcom? This is a fabless semiconductor company that competes across a different variety of different areas. And so, but let's get some stats together first. So the semiconductor business, obviously with the push from AI, has been a very hot sector to be in. Broadcom, no exception. And so let's look at the market cap. So this company is not a small company. This is 1.95 trillion market cap as of 5/19/2026. So this is quite a large company, and it's grown fairly dramatically. And so, and it's a combination of things, and we'll talk about that. And then today, when we do single companies, we go over the GW Investment Institute framework, business management, price valuation, and balance sheets. We're going to go over that, and we're going to score each, give a composite score. But we're going to run through this whole thing, obviously, in approximately 20-minute episode. None of these are real deep dives. So we're scratching the surface sometimes. Sometimes, obviously, when we have follow-up episodes, we go deeper. But for today, it's the first time we're really covering Broadcom. So let's talk about it, and let's get the high-level things out of the way. As we mentioned, market cap as the start, 1.95 trillion. So this is a very large company, and it is a U.S.-based company. So let's jump into now what the sales are. So again, remember, what does this company do? It is in the semiconductor business. It is a fabless business, and so that tends to be a very good business. And its customers are the people that you would expect. NVIDIA's and people that are their, peers like NVIDIA and Marvell, AMD. Those are some of their peers. So it creates ASIC chips, customized chips, and you might have heard, for example, Meta and others that are trying to do, and OpenAI, who want to create their own custom chips, are using AVGO or Broadcom's technology and them as a service. Now, to make the distinction up front here, what does fabless mean? This means they do not fabricate their chips. The principal outsourcer there that they use is TSMC for manufacturing, which we've talked about before, but Global Foundries as well as others. But TSMC is the most. Now, if you wanted to talk about within their business model, what is a potential vulnerability? Well, people talk about, okay, if there's vulnerability within the setup for any of the companies that are fabless, and they rely on Taiwan Semiconductor, especially all the high-end stuff is done in Taiwan right now. So if that ever becomes a geopolitical flashpoint, the Trump administration was just recently in China. Hopefully, cooler heads are prevailing at the moment. But as a risk, it's something to consider, it's something to think about. That's in the business model. But for CapEx, that's much better. That's much more asset light to be fabless. All right, so now let's dive a little further into the business on the revenue side. What are we talking about here? So revenue, and so their fiscal year is 11, ends well, really ends 10/29, or could be 11/02 in the case of 2025 here. But in the case, it's end of the month for excuse me, October. And so if you look back, what was the 11/2/2025 number? That was 63 billion, and then through the last 12 months here, through the end or beginning of February rather, is 68 billion. So the numbers here are good. So 25% increase from the latest number, and then but let's go year over year just to give a sense of where they're going. So the 2024 number 51 billion, the 23 number 35, and then 33 for the 22. So going back across, make it a little bit easier to look at the numbers side by side. From the 22, it's 33, and then 35. That's a modest increase, right? About 8%, and then a big jump. So in 24, you're talking 51 billion, and then to 63, 23%, and then 68, 25%. Now the projected here, significant growth. So the 10/31, 2026 number, fiscal year 103, that is a 62% year-over-year increase, and then the 27 number is 55% at 161 billion. So, and we'll get to the price earnings forward multiple here, which is important because you see all this projected earnings growth. The forward multiple is going to look okay, not super expensive, because you can see 62% followed by 55% on already large numbers. And so going from 68 to 103, again, we want to look at the past. Obviously, where has the company come from to maybe better understand the company? But as an analyst, investor, business person, we really care about what's happening today and what do we think is really going to happen in the future. That's what we really care about. Where's the company? If we're buying it now, if we hold it now, if we're selling it now, whatever we're doing with the company, we really need to be focused on what do we think is happening and where is that going to position the company to be in 1 year, 3 years, in 5 years. The way that the market is moving now, very challenging to think about where's 5 years from now, but certainly 1 and 3 years out, where are we? They are squarely in this AI infrastructure build out on the semiconductor side. So it's really important to think and consider that. And so you can see these large numbers. Now, as we do when we go over the businesses and we talk about, okay, what are the gross and net margins? Let's check those out next. So gross margins here, 67% projected 2026 to go to 75% and 73% in 27. Is that a one-off? No. You go back to 2022, 66, and 2023, 68, then 63, and then 67. So these are very good gross margins, and actually they're accelerating. So they're actually projected to go up to 75% for the full year 2026. That's a 10/31 for them. And the 10/31 2027, 73, almost 74%. So these are fantastic, elite gross margins. Let's take a look at the net margins. The current net margins for the trailing 12 months, 40% last year for the fiscal year, which is 11/2/2025, 40%. Now that has gone up and down. So in the past, the semiconductor business, bit more cyclical, plus they acquired VMware, which has very high margins. And so things have changed. But if you look at 2022, still good net margins, 34%, 40% in 2023, 24% back down, and then up to 40% in 2025, 40% now projected to go, again, what we care about the most, what's happening through the rest of this year, 53% through 10/31, 2026, and 54% through the full year, 10/31, 2027. So where's the company going? Increase in gross margins, increase in net margins. Now, that is highly dependent on what happens from now until then and what's happening with the AI infrastructure build out. If they continue to participate, which they are currently right now, and they're part of the center of this, they're, I would say, right down the middle of the fairway, if you'd like to call it a golf analogy here. They are in the midst of all of this, and they cut across a couple of different areas that people care about: custom ASICs chips, GPUs. They are really at the heart of this, and so, their clients are asking more and more for their services. All right, so next up, so that's the business. So and let's just add one more thing on the business here, so because that's important for the balance sheet as well. These are all interrelated, as you know. If you talk about the free cash flow here, this does not require a ton of CapEx. And so if you look at the CapEx budget here, $773 million, sub $1 billion here. So these are not huge numbers. And over the past years, 2022, you're talking the 400s, and 23, 450, 550 and 24, 620 and 25, projected to get to just under $1 billion in 2026 and 1.2, almost 1.3 in 2027. So compared to Amazon's, as we've talked about in the past, $200 billion to build out for the AI world. They are CapEx light. Now, part of that, as we talked about, because they are fabless, they do not have their own fabrication facilities, they don't manufacture. That is Taiwan Semiconductor. Those heavy CapEx burdens are shifted to Taiwan Semiconductor. So where does that then show up? On the gross, on the net margins. And so they are designing these custom chips for their clients. And so obviously you can see on this CapEx light model that the big, CapEx numbers, like we've mentioned for what Google is doing or Alphabet and Amazon, for example, is doing, Microsoft is doing, Tesla is doing. This is a very different setup. They need to plow money in for those big CapEx budgets. And a CapEx light company like Broadcom is not and does not need to do that unless they change their business model. So that does throw off a decent amount of free cash flow. So you're talking trailing 12 months, $28 billion, 26 the year before that, in the full year 2025. Now, where are we going? Next year, they're saying free cash flow of $51 billion, and that's, this year, full year, 2026, 1031, and then next year, 1031, 2027 is $84 billion. So these are quite big numbers, and so very good. All right, so on the business side, what are we going to score the business? So obviously, these are good numbers. These are good ranges. There is some vulnerabilities. We have to believe in the build out, obviously. Where do we put that? Well, all in all, let's call it an 8.8 or an 88. So let's call it an 8.8 for now. All right, so 8.8 if you want to round to 9, but we'll do it. We're going to go 8.8 at the moment. So let's move on to management. So who's the manager of this company? Hock Tan. Hock Tan has been the manager of this company for a long time through a couple of different mergers and acquisitions. So he's been there, somebody who's a seminal figure in the semiconductor business and has done such a great job, has really shepherded this company through, again, several different acquisitions, and has done a great job of that. So he was Avago before that, then Broadcom, and then Broadcom now through these series of acquisitions and combinations. And so really a stellar figure here, has done a fantastic job, has increased shareholder value, has done the buybacks, has integrated VMware, which has very high net margins on the software side, virtualization, and so has done a fantastic job. So it's really hard to say anything negative about what they're doing. Now, you could say that they have a little too much leverage, which we'll get to on the balance sheet. But the capital allocation here, when we talk about what's the job of management, they have done a fantastic job. For example, the VMware, and they've been very accretive, all the things that they've done. Now, they had that M&A has, been fantastic. Now, the balance sheet, not quite as good. But overall, I think management is doing a fantastic job. And Hock Tan has been executing. Flawless is always difficult to say. There's obviously some things you could say we could like to do this better, or what has done worse than we expected, but has done a really fantastic job. And so overall, through the acquisitions, including VMware probably being the most notable that people would keep track of as an example, and has done very well and has been very accretive to their margins. That's a high gross and net margin business, so fantastic job there. We're also going to give an 8.8 on the management. Great job, Hock Tan. Tip of the cap to him. Has done a very fantastic job. All right, so not going to spend a ton of time today on management. Probably worth revisiting at some point, but we'll get there. So let's now get into the valuation. So this is where people are definitely going to say, no bueno. This is not a great multiple here. It's too high and it's too reliant on the AI build out. So what's the forward multiple? 36 times. So again, this is May 19th, 2026. Expectations are high. We went over the numbers for the earnings forecasts and the revenue and earnings forecast for 26 and 27, and lots of free cash flow. So doing very well. But that's challenging sometimes to think about, that they have to execute on that. And can you get comfortable? Well, the 36 is not sort of a ridiculous multiple, certainly not by any measure, but it's certainly higher than Qualcomm, for example, and right now higher than NVIDIA, for sure. And so when you think about these numbers, these are the trailing numbers, which I'll mention here just for reference, but we really care about the forward numbers. The trailing 72 times, so you can see the expected growth there between those two. But you look at 36 times, that's certainly not cheap. You're paying up, and you're certainly paying for what you think is going to happen in the future here. And again, this is heavily reliant on this AI build out. So, what are we going to give this? Well, let's give this a 4.8. So this is really a 5. So pretty low. And so maybe we could upgrade it a little bit, but let's leave it at the 4.5 for now. And, come back to it maybe at a later time. But certainly there's lots of expectation built into this valuation. All right, let's move on to the balance sheet. Now, you talk about the balance sheet, not a bad balance sheet. So when you think about, okay, we mentioned this is almost a $2 trillion market cap, $1.9 trillion market cap at the moment. Cash and cash equivalents, 14, get 14 billion, 66 billion. So, this, you're not super comfortable here with the debt. So you'd like to have net cash for a company that has such high net margins, such high gross margins, generates a lot of free cash flow. Expected again for the trailing 12 months at 28 at 51. So you're not really worried about the net debt position, let's say 50 billion. But still, it doesn't help you sleep well at night. You're certainly not sleeping like a baby at night with this balance sheet. Altman Z-score here, 13. Again, not too bad. But let's look at the interest coverage ratio for this. 8 times, not great. We'd like 10 plus. Now, why would we worry a little bit less on the balance sheet? Well, it's because, high free cash flow generation, low CapEx burden, and so not super concerning. But, you're not going to give it as high as the score as an 8.8, certainly not a 9 or a 10 here. It could be better, but given where they are, given how the business is set up, and given where the business could go, it's hard to ding them too much, given, again, the low CapEx intensity, for the business and the high gross net margins and free cash flow. Interest coverage, again, 8 times, could be a little bit better, but we'll leave it there. All right, so what are we going to give it on the balance sheet? And then we'll come back and we'll pull all this together and talk about the company overall. 8.2 times. So we'll pull it all together here and review a little bit. So when we talk about, again, the business, this is at the heart of the semiconductor AI build out. They are best in class here, and they cut across custom ASICs chips, networking, and so they compete really with a lot of different companies on those different verticals. Now, there's probably not a single company that competes with them directly in all of those verticals, and so in this way, they are unique. But that could be perceived as potential advantage or potential disadvantage. That some of these companies, like on the networking side, Arista Networks, we've talked about before, it does a better job specifically on that. NVIDIA does specifically better job on the GPUs and the accelerators, and Intel does a specifically better job on the CPUs. So you could argue that this lack of specialization across these different verticals is a weakness. But you could also argue that, and I think both arguments have some validity, you could also argue that given the breadth of their operations, they're well positioned for the AI build out, and they're really going to be able to capture a lot of the value that gets put into and created from the AI world, because they have this diverse set of products that cuts across the things that you need to get AI to be more efficient, to be more valuable, to generate more value. And so they're the best positioned company, or one of the best positioned companies for that. So that's an argument that you can make as well. Right now, the market's obviously buying more of that argument than the prior argument that I made, that they're obviously going to garner a lot of this value. And hence, again, on the business side, we gave them an 8.8. And so that is a very good score. Now, when we talk about management, Hock Tan, I think, is one of the best in the business. We gave him an 8.8 there. VMware acquisition, they executed super well. Again, high gross, high net margins, fantastic, lots of free cash flow generation, definitely a dominant player in the business. The price valuation, we gave them a 4.8. Not great. Obviously, the forward PE here is very high, 36 times. And there's a lot of expectations built into that. When we talked about the numbers and the growth that you would need to expect to get there, you're talking 60% for the full year this year of growth on the revenue and 55% for 27. So a lot of expectations built into the valuation side. Again, Not ridiculous at 36 times, but certainly lots of growth built into those numbers to put that number down. 4.8 on the balance sheet. Net debt, don't love it. However, again, CapEx light business, $1 billion this full year, $1.2 billion for next year, $50 billion, let's say, in net debt. Not great from our standpoint. Interest coverage, remember, earnings before interest and tax over interest expense, 8 times right now. Like that to be a little bit higher, so we're going to give them 8.2 there. You pull that together, that's a 7.6, 7.7. Maybe you want to round it up to an 8. Very good. From average to very good, depending on the component, comes out to, let's say, average to slightly above average overall. There's a lot going on here. We could spend through 2 or 3 episodes, to talk about Broadcom. We'll revisit another time. There's a lot happening in the AI world, the AI build-out. They're definitely at the center of this, and they're worth watching. So as a business person, analyst, investor, I think it's important to understand at least what they do, even if you're not going to own them, understanding how they fit in to the other parts of the business. So I think this will help scratch the surface for Broadcom. Again, we own it in one of our portfolios in a small indirect amount, so not a big setup here. We appreciate everybody watching. Again, non-investment advice, entertainment purposes and educational purposes only. We hope everybody has a great rest of your week, depending on when you're listening or watching this. Again, send us some comments. Let us know what else we can cover. That's it for this episode of Market News with Rodney Lake. Thank you. Disclaimer, the content shared in the GW Investment Institute podcast is for informational and educational purposes only and should not be considered investment advice. The opinions expressed in this podcast are those of the host and guest and do not necessarily reflect the views of the GW Investment Institute or the George Washington University. Listeners should not act upon the information provided without seeking professional advice from a qualified financial advisor. Investing involves risks, including the loss of principal. The GW Investment Institute, the George Washington University, and the podcast hosts do not assume any responsibility for any investment decisions made based on the content of this podcast. Always conduct your own research and consult with a financial advisor before making any investment decisions.